Good afternoon, everyone. This is Brad Matheny. I tried to create this video a couple days ago, but I hit the wrong button on my keyboard, and I got to be careful not to do that because every time I change the screen size, it stops the video. So, this is for Mint.com subscribers to talk about how I trade and how I position my accounts. Now, I'm generally pretty conservative. I don't like being overly exposed in the market, but I will push my boundaries when I have some conviction. I will always, again, always try to leave at least 40, 50, 60% in cash at any given time. And if my trades move underwater, meaning if I've gotten into 20, 30% of my total capital amount and my trades are underwater, then I'm extremely cautious until I can get those trades to perform or uh, get into a mode where I can at least try to rebuild. So, if I go underwater in my trades, and say I had $10,000 and I put $3,000 in the trades, and okay, maybe they didn't work out. Maybe I put another thousand in, so now I've got 4,000 into trades, and it's not working out. I will not, absolutely will not chase anything. I will let everything play out, trying to regain any value that I can in those trades until I get to a point where I am sufficiently away from that lower risk level. So, give you an example. If I come over here and let's say that this is zero and this is where I'm at 10 grand, and this is zero. So, if I'm somewhere here in the middle at 10 grand and I invest 3K of my money, put that right here, and I'm going up and down. Okay, if hypothetically the rest of it is in cash, theoretically I decide, okay, well, I think my timing is right. I might go up to 4K and I might trade that 4K. But if, for example, that 4K moves down and it starts losing value, I will not take any more trades. I will try to work those trades to the best of my ability to get value back. I will try to wait it out. I will try to wait for something to happen, try to get as much value as I can out of the trade, and then I will take a look at where my count is there. At that point, maybe I've lost $1,500. So maybe I'm down to 8,500 over here. At that point, that's my new starting point. Okay, so I've lost hypothetically, you know, $1,500, and now I'm at 8,500, and now I'm out of my trades. At this point, I'm completely out of my trades, or darn near out of everything. So I might be at this level now. At that point, I now have that 30% level that I'm always sticking to, and in general, I'm looking at trying to keep that 30% level active. So if this is the case, a couple extra dots out here. I'm always looking at trying to keep that 30% level as my baseline. So this is really that 30 to 40% invested level. So understand that, if I get into some trades over here and get up into that level, at that point, I'm done. I'm not going to risk anymore. I'm leaving the other 60% there as a backup. In case something fails with these trades, I'm done. I will not go deeper than this unless I have absolute conviction, and then I'm really breaking the rules. So, if hypothetically, if I take a loss and it comes down, I'm going to try to maximize what I can out of it. Let's say I took the minus $1,500 loss here. So basically, I'm looking at a minus $1,500 loss here. That means my 10K account drops down to 8,500. That means my 30% level now drops down to about this level. And depending on where I'm at after closing a bunch of trades, maybe I'm here, I can now start to trade again at that level. I want to make sure that I do not blow up this structure. So I do not want to get into a scenario where I'm risking too much or I'm excessively trying to leverage into failed trades. And that's typically how I manage my book. So if you think about it again from a different standpoint, I have, X, X in total capital. I only want to trade 30 max, so max 30 to 40% of my total capital. If I get to the point where I've invested 30 to 40% of my total capital, I stop trading and try to work those trades into success. If I take a loss, that drops my available capital to trade to lower levels, and I never try to break this rule. So the idea here is even if I screw up every trade, they all go to zero, I still have 60 or 70 or maybe 75% of my capital left over to rebuild. Make sense? This way I can never go belly up. Now, granted, I could if I made a series of horrible trades, so you figure it out mathematically, you know, 10K, start off with 10K. And let's say I took a bunch of trades and I lost 80% or 20%. So now that means I'm going to have 8K. So now I'm going to have the ability to trade 30% of 8K. That's 2,400 bucks roughly. And let's say I took a bunch of trades and I lost another 2 grand. So now I'm at 6K. That means that I can put another $2,000 or so into my trades. Let's say I took another loss in $1,500. Okay, so now I'm down to what, 4,500. So you get the idea. I would have to make a series of losses, and it would have to be horrible losses. Now at 1,500, 4,500, I have the ability to trade about $1,600, $1,700 in my trade. Let's say I take another $1,000 loss. Now I'm at 3,500. So you see how this is a scenario where it's like a triggering mechanism where if I ever get to that point where I'm having a substantial amount of capital invested, I must try to recover that capital in the best way possible to eliminate excessive overuse of my capital. And this also gives me the ability to have kind of a limiter. At some point, I have to stop myself from continuing to make mistakes. So this is the way for me to do it. I just prevent myself from chasing bad trade after bad trade after bad trade after bad trade. Now, there have been instances where I have broken the rule. Okay, gold has been one of those instances. Silver has been one of those instances. Recently, I have gotten myself up to 55% totally invested in some of these moves, but it has paid off. Now, again, at that point, you need to understand that I'm trading in the money options or at the money option, so I'm very unlikely to see an option go down to zero. I might lose 10 or 15 or 20 or 30% on the option. And if I have hypothetically $2,000 in an option trade and I've lost 25%, it's okay. I still have $1,500. I'll just sell out of it, have my $1,500 and save that capital for something else. Okay, so this is the primary rule that you need to kind of pay attention to. This is the part of what's called the 3333 trading plan. So you have this thing here, and it's basically the 33, 33, 33 trading plan. And it's something that's available on my website. You can get to it over here. I think it's here, mint.com. I talk about it here in the learn to target the 30 to 40 here, 33, 33, 33 trading plan. And it's on my website. think it's available in the expert growth members area. Let me come over here. And so I think we have it here. Training, resources. I know I put it here somewhere. Training, resources. Let's see what we have here. Uh oh. Page doesn't work. Okay, I'll have to fix that. Setups. Find script tools, trading portfolio, getting started. Okay, I'll have to figure out why that one page doesn't work. And I don't want to spend a bunch of time looking for this thing, but I will put it, make sure that it is available here. I must have changed something for this resources page to fail. Member resources, member support, trading support. Yeah, I'll have to put it up for you. But it's a document. It's a Word document. I created it a year and a half ago. But it's basically setting up the fact that we'll come back over here. That out of your total account, you trade 33%. Okay, and the whole idea is that you could trade 33%, never maximizing your risk to exposure, leaving a secondary 33% of your capital as reserve capital for trading, and leaving 33% as a cash reserve. So the whole idea here is you could blow up one and then potentially two and still have enough money to try to recover. And that's the whole theory. It breaks down like this, where if you take losses, you take minor losses, you recenter yourself, and you figure out what you're trying to do to make your trading better. Okay, so now back over here. The 33-33 trading plan is only trade 30 to 40% of your total capital at any given time. If I trade up to 40% of my capital, then I don't take any new trades and I try to maximize what I can out of the existing trades that I have. Taking profits, generally anything that's greater than 20 to 30%, I consider taking profits. Okay, I'm not stupid. I don't want to say it the wrong way, but if the market's going to hand you 30% or 25 or 50% on a trade and you want to let it ride, well, go for it. Okay. But me, I'm going to be taking 20, 30, 50% of my profits right then. Meaning that if I have 10 contracts, I'm going to sell three, four, or five, maybe six of them and let the rest of them go. If I wake up in the morning and there's a big gap and I've got 80 or 100 or 140% on a trade, you darn well know that I'm going to go grab at least half of that and book it. Why? Because it's money in my pocket, not money on paper. And at that point, my count goes up. I still have some runners. I can always add back in if I want, but it gives me the ability to essentially book profits. Remember, booking profits are winning. And that's what we're here to do. We're here to win, not watch it go up and watch it go down and watch it go to zero. Okay. Building your account. When you start out, if you have a small account and you're trying to, really build your account, any profit that is 15, 20, 30%, I strongly suggest that you just book it, get it down to one or two contracts as a trailer and let the rest go. Okay, you can add more if you want. I don't recommend you do that until you've at least maybe tripled or quadrupled your account, because you need to understand the mentality of trading is that it sucks you in. If you think, like today, I had to stop myself from trying to buy gold and silver. I don't want to see gold and silver rally, excessively, and I miss it. But at the same point in time, my research tells me that gold and silver are going to top out and roll over. So think about it. Why in the world do I want to chase something when my research says it's going to go down potentially? So I have to stop myself from chasing this trend, even though gold is up 3% today. I don't want to get caught at this top and watch it crash over the next 5, 6 days, especially if we get into a government shutdown. So you have to teach yourself to wait for the market to give you the setup. I had the same problem today in natural gas. Here's natural gas over here. I wanted to get into natural gas this morning, thinking it was going to maybe open up down in this area after the contract rollover. But I watched it, I saw what was going on, and I realized the best thing for me to do was to wait because I could be chasing this mode in a topping formation. And if I just wait to see what happens, I have my existing UNG trades. They're plenty enough to make me some money if the market goes straight up. And rather than try to kick the market to do what I want to do, which is probably not going to do what I want to do anyway, at least right now, then I'm just going to sit and wait for that opportunity when it sets up. So again, it's a matter of just waiting and learning to wait. But if you try to stick and shoot for that 25 to 35 to 45%, and you do that repetitively through your trades, you will see that you can quickly grow your account. You can double your count every 30, 40, 50 days, if not faster. Just learning to take what the market gives you. You get 20%, great. If you're trying to start off and you get 20% on a trade, take it. If it goes to 25 or 30 and you're sitting there not knowing what to do, look, you're looking at a 30% gain. Most people don't ever get a 30% gain, instead of waiting maybe 8 months to see a 7, 8, 9% gain on regular stock trading. So if you're looking at a 30% gain, and even if it's only 25 or $55, let me tell you, you do that 5, 6, 10 times a week, and you're looking at $500 a week. Just trading, very simple. Okay, so you can do it. It's just a matter you have to teach yourself to do it. Now, containing losses, this is one of the hardest things for everybody. Okay, I'm going to tell you my own rule is that, I wait, like right now, I'm short the market. This is the SPY trading right now. You know that I've been telling you, I think it's going to come down. I think we're going to get into a breakdown mode. And to be honest with you, I'm normally ahead of the market. So I deal with trades. And let me take a look at my phone. So, for example, come back over here. I'm down $500 today. Not bad. And so, for example, my QID trades from last week are down 21%. My QLD trades are down 8%. I've got another set of QLD trades that are down 40%. My QQQ trades are down 25%. My SDS trades are down 11%. My SILJ trades are up 174%. My SLV trades are up on 230. My SPX S trades are down 20%, and my SSO trade is down 27. So now, am I stressed about having some of these 20, 30% losses? Well, no, not really, because I'm setting at, 75% cash right now, maybe a little more, and I'm waiting for the trades to break down. So hypothetically, we come back over here, move this. I'm set up for a breakdown. I started selling over here and up here, and I think I added a little bit here. So essentially, I'm waiting for a breakdown. That's what the predictive modeling has suggested. I'm ahead of the game. I bought very cheap options. I know I'm going to take some heat as these options continue, and I typically buy, you know, anywhere from 15 to 45 days out. So, as I mentioned to you earlier, my options, the current options I have expire over here near the 20th. So right in this area, whoops, right in this area. And so I'm giving myself really, you know, 2.5, 3.5 weeks of trading to see if I get a breakdown. And what I'm really looking for, the way I've stacked my orders, so I started out here with a small amount, like $4,500 in total trades. And then I added about another 2,500 here. Then I added another 2,500 here. So I got about 10 grand in total trades for the breakdown here. And if I'm correct and we get a moderate breakdown, even if we come down into this area, which would be about a 50% pullback right here, most of my trades will turn into profits. Most of them will turn into 40, 50, 60, 70% profits. And that'll be enough for me to start booking. If I catch a big breakdown into this level, well, then great. I'm going to be booking all the way down. And if it looks like it's really going to break down, I might add a couple of, 5 or 10 day options to try to turn around and maximize my profit on the way down. Eventually, like I said, this support level and this support level are going to become critical. So we're going to see how it plays out. But again, the way I've stacked my orders, all I need is, and think about it, all I need is, let's go from way up here, basically about a 2% move down right into this area, and my all of my trades will become profitable. Now, 2% move seems like a lot, but it's not, guys. The S&P moves 5, 6, 7%, easy, roughly every quarter. And you can see these rotations. Look at these moves. So here, from here to here, 2.6%. From this low to this high, 3 1/3%. From this low to this high, 2.8%. So understand that it's not uncommon to see a 1.5% move in the SPY or more very quickly. So I'm not unreasonable in my trade here. This is a very actionable trade setup. How do you contain your losses? You come back up here. If you get into trades and you hit that 30, 40% max of your total account and things aren't working out, hopefully you didn't set up a bunch of 2 and 3 and 4 day options because you want time to let things work out. That's why I've learned that I don't trade 5 day options unless I'm in the middle of a decent breakdown or rally. And then maybe I'll get into something that's only 4, 5, 6, 7 days. But generally, I trade 7, 10, 15 days out or longer. And that way, if I'm wrong, at least I have some time to hopefully recover my money or get it to turn around and try to make some money on my trade. I've learned that, I do not like to trade 0 day or 2 day or 3 day options unless it's a very small amount of money and I'm just trying to catch a runaway move. Okay, that's it. That's where I'll get into it. Or maybe it's a reversal, like right now. You come over here and you see this setup. This is a great little topping pattern here. Does it mean that it's going to break down? No, but I could go out and get 3 or 4 SPY puts going into Monday or Tuesday of next week and just say, okay, there's some lotto. If it breaks down and crashes over the weekend when the government potentially shuts down, you know what? That might be a lottery trade. And I might do that on a 3 or 4 or 5 day option, just real quick. But my trade amount would be very small, maybe 4 or 500 bucks out of my, 180, $190,000 capital reserve. I'm not trying to I'm not trying to go all in on these short term trades. It's like going to Vegas, stupid example. It's like going to Vegas, showing up at your first table, and putting all of your money down. No, you're stupid. Pardon my language. I'm not calling anybody stupid, but I'm going there. I want to have some fun. So, at least for me in Vegas, putting 10 or 20 bucks down on my first trade is pretty much my limit because if it works, I'll take 100 bucks. I'll break it into $10 bills or whatever, hand $100 to the dealer and get my chips. And 5 or 10 bucks is normally my first couple bets. Just see what happens, get a feel for it, try to make some money back. If it works and I turn 100 bucks into 200 or 150 or 180, whatever, great. I pack it up, I walk out, and I find somebody else to do it again. Once I'm getting more comfortable and I'm up by 3 or 400 bucks, then I'll start betting a little further. It's a matter of, like I said, nickel and diming your way into success and then doing the same technique, but with larger money. So, so I start with 100 and now I'm up to 700. Guess what? Now I'll start playing 200 or $250, but I'm going to use the same technique, smaller rational bets. At that point, maybe 10, 15 bucks, 20 bucks each. Okay. But I'm going to do the same thing. I'm going to try to manage my risk and theoretically only allocate 20, 30, maybe 35% of my total capital at one time. So if I go completely wrong, I still have more to start off with. And if something goes wrong and I take a loss, then I'll probably go back to starting with $100 and going back to a table, break it into tens or $5 chips, and playing with $5 or $10 bets until I get on a winning streak again. Okay, so I try to trade at the money or near the money calls. So if I were looking right now at this chart, we're trading at 695.46. If I were to try to get into a put, I would be trying to buy a put option at 695, really, or 696. I might pay the premium for the 696 if I want to give myself some room to have the option stay in value. So the idea then is, depending on the length of how long I want to trade, remember, if I was looking at today's Wednesday, if I wanted to have the option and the options were cheap enough, let me see what the options are like right now. So SPY, oops, doing this on my phone, guys. So check out the options and we go to a, let's call it a 6 day option that's out into Tuesday. Put option right now at 695 is just under 400 bucks. So I would then take a look at the idea that, okay, I'm giving myself from now to next Tuesday for a 695 option. And you know what? Let me do it. I'll do it real quick and try to show you. Oop, there goes my charger. So I'll pick an option. I'll put four of them on. I buy and sell at market. I don't deal with limits. And boom. So now I have a couple of SPY puts expiring February 3rd. I've got four of them. And it cost me a total of about 1,200 bucks, maybe 1,500 bucks. So there's my trade. So now what I'm looking for, here's the trade. Let me drag this out of the way. What I'm looking for here is my limit is right in this area. That's the price area that I picked. And it's a very small position. And essentially, any breakdown into Monday, Tuesday next week over here, say below this level, 692 or really 694, 693, but any breakdown is going to give me a chance to turn that 1,500 bucks into maybe 1,800 or 2,000. And I'm giving myself enough time. And what is that time? Okay, I'm giving myself today, rest of today, tomorrow, Friday, and then of course we get maybe the government shutdown. Who knows what else on the weekend? And then I'm giving myself Monday and Tuesday to try to turn it into a profitable trade. Now, is this going to be a make or break trade? No, it's a nickel and dime trade. But you know what? That extra 600 or 700 bucks helps. If I do it often enough, then yeah, that works. Now, if I were to try to take a longer position waiting for this move, I would look for something out into early March. So if I come back to my phone and I take a look at the SPY and I take a look at the options and go out here to a, let's go 37-day option. That's till March 6th. It's going to cost me $1,000. Okay, $1,000 to get into an option expiring basically 40 days, 37 days out roughly. And now, granted, I won't be buying, 20 or 80 or 100 of them. I'm not going to put 100 grand into a trade. No way. Not when I have my total capital, working capital is only 180, 190,000. That's stupid. I will put maybe 3 or 4 or 5,000 into it right now and set up a mechanism where, and I don't want to get rid of all of these lines, but I want to set up a mechanism where I am positioned up here for a breakdown. And I have a small amount active for that breakdown. Now, when that breakdown starts to happen, depending on what the news is, I want to be able to take the rest of my capital and start to potentially pile in on breakdowns or on topping patterns when I think the opportunity is correct. So if I think this is going to move down like we had with the gold move or like this rally here, I want to be able to take and add a couple as needed short 4, 5, 6, 10 day options to try to catch this move to the downside. So when I start to set up my first legs, when it's going up, remember, I'm giving myself time out here 20, 30 days out here to try to see those trades turn into topping patterns. When I'm getting or get in, turn into real profits. When I'm getting closer to what I think is the top, I will still give myself time, but I might give myself 5, 6, 7 days and trade a very small amount. So these are heavier trades, more contracts, giving myself that 30-day window for a breakdown. I want to try to catch that top 2, 3, 4 days before it happens, or catch the bottom right as it happens, or 2 or 3 or 4 days before it happens. And then as we're getting close to it, I want to kind of sit and wait, maybe take some very small targeted trades. And then once it starts to really break down, or in this case, I'm expecting it to break down, then I want to try to kind of pile into this momentum. Now, remember, you know, I took my profits over here. So when I was long off of this low, caught up to this level, this bar here weekend, I got out of most of my trades here and started setting up my shorts. I didn't know if price was going to turn over in this area or if it was going to rally up in this area. I knew it should roll over at some point over here near the end of the month. I just didn't know if it was going to be 2, 3, 4 days early or 2, 3, 4 days late. Don't know. Okay. But what I do know is if I give myself enough time and let the markets come into what I believe is the proper direction, then I can just wait for markets to come into my profit zone and execute the profits. So, does that make sense, guys? Hopefully, it does. So, how do I consider a trade a failure? It's really up to you. Okay. I consider a trade a failure if, I lose more than 20 or 30 or 40%, and everybody loses money on trades. You're not going to be Mr. 100% accurate all the time, or misses. It doesn't happen. The goal here is not to lose all of your capital, which is again why the 33, 33, 33 plan is so important. You need to understand that this will protect your capital, make sure that you don't blow up your account. And then the idea here is think of them like planting a tree. Okay, so my mom taught me this a long time ago. So, you know how a farmer gets rich off of planting trees? Is they plant a bunch of trees. So, look here, planting trees or bushes or whatever. So, you know how he does it? He plants maybe 10 or 20 or 100 a day, whatever he does, 1,000 a day. And then he's got to go back and tend them and manage them to get them to grow. Okay, so he's basically trying to get them to grow. And once he's able to get them to grow, now remember, not all of them will grow. So maybe these didn't make it. So he plants another 1,000. Okay, and what he's doing is over time, he's building an attritionable value in his land. Because once these plants are self sufficient, growing on their own, and all he's got to do is water and take care of them, then you can see how many he has that are successful. Now, he's not looking at one plant to give him 100% or 200% or 300%. He's looking at the plants to give him, 10, 15, 20% plus plus. And if he can do that through the 8 or 10 that succeeded out of these 12, or the 6 or 10 that succeeded out of these 15, you know what? Then he's doing okay because these died out early. He didn't waste his time on them. You got out of them efficiently. You protected your capital. You didn't risk a lot. And now these, if you grab your 10, 15, 20% on these and another 10, 15, 30% on these, and you keep repeating this process, guess what happens? And I'll show you what happens here. So hypothetically, you start off with 5 grand. You have a bunch of trades over the course of a 30-day time frame. You average, let's say, 55%. So times 1.55. Now you're at 75 or $7,700. Now you go through your third set of trades. Let's call that another 30 days, and you average 45% times 1.45. You're at 11 grand. Okay, so now you do the same thing on the third month. and you average, let's say, 37%, 1.37. Now you're at $15,000. Okay, you tripled your account in 3 months, targeting the smaller number targets. Okay, and I want you to understand that is so, so important. Now, once you start getting a little bigger and you start getting more efficient, you will start getting into, like some of the months that I've had, 150, 160% return on investments in a month because you'll be trading larger. 30% on larger numbers is is a big number. 50, 60% on a big number is a big number. So now if I start doing 60% on some of these numbers, look, so start with 15 grand times 1.6, that's 1 month, times 1.6, that's 2 months, times 1.6, that's 3 months. So you started with 15 grand and now you've tripled your account in 3 months simply because you're trading larger and you're going for a little bit bigger gains, but you're still using the same technique. Does that make sense, guys? All right, so this is designed to help you guys understand what I do and how I'm doing it, and understand my timelines and how I trade. I trade market orders. I don't trade limit orders. I let the trades go. I take my losses, my lumps. I've had a few of them. You can see here if you look at the expert growth page. Oops, look at these results. Losses, 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 losses. These are paper losses, sometimes real losses. Sometimes things just get, you know, get completely out of control, especially when I'm having, dad in the hospital or major problems or whatever. So there are losses, which is why, as I'm trying to share with you, this 3333 trading plan, like we have up here, this helps you prevent major blowups. So you stick with this, and I think you're going to be doing a lot better than going, you know, crazy simply because this prevents you from taking losses. And this is something I created a long time ago, which was a simple rule here for allocation. You start trading, this is an allocation model I built like 15 years ago. And the idea is start with X, whatever it is. If you lose 15% of that capital, cut your trading in half. So let's say your allocation model have whatever, trade 50% of that capital. If you lose, then you cut your trading in half, which would now be 25% of whatever capital you have left, right? So if you started with a million and you traded 500,000, if you lost 15% of that 500 grand, you'd cut your trading in half. So you've lost out of that 500 grand, you've lost 62,000, and you're now trading only 25% of it. Now, if you take another loss, if you lose another 15%, cut your trading in half, which is now 12.5%. So now this is a way for you to protect capital. And what this does is it gives you the ability to, if you're losing, cut in half, cut in half. This means you can still trade, but you're not gonna have any real substantial effect on your total capital. And then if you take another 15% on that capital, stop trading. Why? Because you're doing something wrong. If you go loss after loss after loss after loss, stop trading. You're doing something wrong. Figure it out. You still protected at this point more than 60% of your capital. Now, at any point in time in these areas, let's say we have a caveat, okay? And that caveat is if you start gaining capital and rally above the previous action level, oop, then increase your trading capital to the previous level. So again, I have a conference call in 6 minutes. So if I move from this level and I have to cut my trading in half, and now I'm trading at this level, if I do not lose another 15% and I rally back above this threshold, this 15% threshold, then I can begin to move my trading capital back up to this level prior to cutting it in half. Same thing here. If I get to this level and I don't get any further, and I'm trading at this level, which is now 12.5%, at that point, if I go up above this threshold where I had to stop trading at this point or cut it down to 12.5%, then I could move up to 25%. So it's a matter of, if I start here and I take a loss, I cut my trading in half. If I come down a little further, I take another half. If I then turn back around and get above that level, now I can start increasing my trade amount to be able to try to move back up into this level without risking too much. And what I would do is I would step up my trading at roughly, two or three or four legs. So if I had a cutting, a one half cut, I would start moving everything up in maybe 12.5% levels. So that would give me the idea to move up. Okay. All right. Got to get into this call. Hopefully this helps. Um, I'll get the other page set up that I'm missing. I didn't even realize that one was missing. And hey, if you do run into pages that are missing over here, in the expert growth section, let me know. I don't know why this resource page is not working. TT scanner, PHP, line 136, no such file or directory exists. Okay, I'll go fix it. I don't know what caused it, but I'll go fix it. And I'll talk to you guys later.